Hi, I'm Satyam. Today, the Indian stock markets ended on a lower note, with both the BSE Sensex and Nifty 50 closing in the red. The BSE Sensex closed at 81,523.16, down by 398.13 points, or 0.49%, while the Nifty 50 slipped by 122.65 points, ending the day at 24,918.45, also down by 0.49%. This decline was driven by profit booking across various sectors, as investors grew cautious ahead of the release of crucial U.S. inflation data, which is expected to play a key role in shaping the Federal Reserve's monetary policy in the coming days. The trading session today saw a lack of clear direction for much of the day. Investors were on edge, awaiting the U.S. Consumer Price Index, CPI data, which is expected to provide a clearer picture of inflation trends in the world's largest economy. This data, which is due after Indian market hours, is anticipated to show inflation edging closer to the U.S. Federal Reserve's target of 2%. A reading in line with or below expectations could prompt the Fed to consider a modest 25 basis point interest rate cut next week, providing much-needed relief to global financial markets. However, any deviation from expectations could lead to market volatility, adding further uncertainty to an already cautious environment. Throughout the session, both the Sensex and Nifty struggled to find direction. Investors appeared hesitant to make bold moves, as they awaited further clarity on the global economic outlook. This hesitation was evident in the subdued market activity, with gains and losses fluctuating throughout the day. However, in the final 2 hours of trading, profit booking intensified, driving both benchmarks deeper into negative territory. One of the key factors contributing to today's market decline was the sharp drop in crude oil prices. The domestic oil and gas subindex fell nearly 2%, reflecting heightened concerns about weakening global demand for oil. This decline in oil prices comes amid growing fears of a slowdown in global economic activity, particularly in key markets like the U.S. and China. As global demand weakens, oil prices have come under pressure, adding to the cautious sentiment that has been prevailing in markets over recent weeks. Apart from the oil and gas sector, other major sectors also saw losses today. The market's negative sentiment spread across most sectors, with only consumer stocks managing to buck the trend and log gains. Consumer stocks, often considered a safe haven during times of economic uncertainty, were able to hold their ground as investors looked for more stable investments in the face of growing market volatility. Despite the widespread losses, the consumer sector's resilience reflects the broader confidence in domestic demand, especially given the steady recovery in India's rural economy. A stable monsoon has bolstered agricultural output, which in turn has lifted rural incomes, driving demand for consumer goods. This sector has been a consistent outperformer in recent months, and today was no exception, as investors continue to place their bets on the long-term growth prospects of India's consumer market. Meanwhile, the global backdrop remains uncertain. All eyes are on the U.S. inflation report, which will have far-reaching implications for monetary policy, not just in the U.S. but also around the world. If inflation trends lower than expected, it could pave the way for a more aggressive rate cut by the U.S. Federal Reserve, potentially providing a boost to global markets, including India. On the other hand, if inflation remains elevated, the Fed may adopt a more cautious approach, which could weigh on investor sentiment and keep markets on edge. In conclusion, today's market performance reflects the cautious sentiment prevailing in global markets. Investors are taking a wait-and-see approach, with profit booking dominating the session as they await key U.S. inflation data. The outcome of this report will be crucial in determining the next steps for the U.S. Federal Reserve, which in turn will influence the direction of global financial markets. Until there is more clarity on the global economic outlook, we can expect markets to remain volatile, with investors continuing to seek out safer, defensive sectors like consumer goods. As we move forward, the focus will remain on global developments, particularly in the U.S., as any policy moves by the Federal Reserve will have a significant impact on market sentiment. In these uncertain times, it is essential for investors to remain vigilant, diversify their portfolios, and stay informed about the latest economic trends. This video is made for educational purposes only. Please don't make any investment decisions based on it. If you like the video, please like, share, and subscribe. Thank you.